Well, in FinStreet today, we have Ms. Maharukh Adjania, Executive Director at Nuvama Institutional Research. Welcome to the show, Maharukh. Let's talk about what is aiding this loan growth in the banking system. So, incremental non-food credit growth, if you take a look per month in FY23, is perhaps one of the best that we have ever seen. How would you look at the run rate? Is it sustainable going ahead, or would you see some moderation? Part of the rise in loans is also due to lower principal repayments. So what are your thoughts on the loan growth?
Yeah, hi. Thanks, Abhishek. First of all, congratulations on FinStreet. Uh, on loan growth, so yes, the run rate has been good. It's not only loan growth that has been good in FY23, but banks have performed exceptionally well on all parameters. If you see data up to Feb 24, you see some slight hints of a slowdown in bank credit in Jan Feb. Probably that's because of a high base, but you know that March is a noisy month and all banks push aggressively for credit in March. So I guess overall loan growth for the sector by March end should be 3% QOQ, which is roughly 15.5% YOY.
Now, private banks are opening branches and going out all guns in terms of business momentum. We are not seeing this with PSU banks. However, this is a surprising factor that branch opening is taking place at a time when digital penetration is strong. So what is your view with respect to, loan growth between, let's say, private banks and PSU banks?
So private banks have always outbeaten the sector's loan growth. Whereas PSU banks, because of their already big size, especially the likes of SBI, grow at the sector pace. So that's been happening. And I think the market share gains or the private banks growing faster than the sector, that pace will continue. And in terms of branch addition, state-owned banks already have huge reach. So they don't really need to add so many branches. And even in private banks, some are adding branches, some don't have aggressive branch expansion plans.
So it's
Given the
basically a
run-up to the
catch-up is
merger,
what you are trying to say.
that's correct.
Okay. So as you mentioned, retail loan has been the biggest driver amongst all the segments of loan growth. In that, personal loan and housing loans, which you also addressed, have been one of the biggest in terms of massive growth that we have seen. So your view on retail loans, is it overcrowded or there is scope to grow over there?
So, in terms of retail loans, I think all good segments, whether it's retail or corporate, are overcrowded, right? So, it depends on the turnaround time, even on rates to an extent. If you see India's demographic story, it's a multi-year growth story. So, it's not going to end in 1 or 2 years. However, multi-year growth stories, that doesn't mean that it'll be a straight curve upwards and there will not be any blips. So there will be years of slow growth and years of fast growth, even in this multi-year demographic growth story. So that will continue to be the case. However, as I said, that in terms of consumption loan growth, customers have become rate sensitive, especially in retail home loans, right? Because in other brackets, rates have not risen as much as in home loans. So at a price, there's a demand and that demand will sustain. However, consumers may not be able to sustain the same demand if price hikes happen, as in so they are getting very rate sensitive now, which is why you see that not only are new home loans being offered up to March at 8.5%, but there's a lot of refinancing happening as well. Existing customers whose rates have now increased to 9.3 are also coming up for refinancing. Otherwise, there is a risk of balance transfer.
Well, Maharukh, the large ticket capex, when can we see that growth coming back? Anything that you have picked up with respect to, large capex growth coming back to the banking sector?
No, so basically the small ticket capex is happening, which is why the needle is not moving in terms of growth. There's no large ticket capex. Rather, there are some large corporates who had planned huge expansion plans, but they're cutting those expansion plans, is what some of the banks tell us. So there is small ticket capex, there is capex in roads, in cement, but that's still small ticket only. And the way the large ticket capex happens is that, there are large plans, but they are subject to global environment. They are
Correct.
subject to global volatility. So those plans are not yet frozen
Okay.
and they are subject to review.
Okay. One of the drivers that we have seen in the loan growth is that the fact that NBFCs have moved from money markets to banking sector for loans because of the rise in rates or coupon rates that we have seen in CP market. So your view on sustainability of loan growth coming from the NBFC sector for the banking?
Yeah, so I think that so long as we are not going to see a fall in rates, NBFCs will have to continue to borrow from banks. Of course, March is a very tight month. And given global volatility and changing views on global rates, some of the NBFCs are also preponing their demand, right? They're preponing their borrowing. So all that is also happening. But NBFC demand should sustain till the liquidity situation improves. Then they'll go back to the bond market. I mean, some of the demand will go back to the bond market, but that may not happen for the next 1 to 2 quarters.
Well, thanks for joining Maharukh on the show and giving your view on, how the loan growth for the banking sector will be going ahead and how segmentally, the loans can perform. Thank you.
Thank you so much.